anybody else noticed that. It pretty much got body slammed. And I'm going to break down some of why this has happened just so you can kind of know, and then to sort of talk about from a financial consciousness standpoint how to process market declines and what they look like, and what you might also refer to as market corrections. Really, they're corrections. They're not, they're not calamities. It's not the end of the world. It's nothing really to panic about, but it is something to have an awareness of and an understanding of, and to also know that there's opportunities there. There's opportunities in every situation, and one of my jobs is to help you to see the opportunity so that you don't spend so much time freaking out that you spend time missing out. Right? I don't want you missing out. I don't want you freaking out, because freaking out will cause you to miss out. All right. So the other thing too is don't forget we have a stock options summit coming up in Los Angeles on April 19th. If you'd like to join us in LA and spend 2 days doing nothing but stock options with awesome, intelligent Black people, then go to you can go to oh, sorry, let me turn this off. You can go to stockoptionsummit.com. That's stockoptionsummit.com. And also tonight at 8:30 p.m. Eastern, we're going to show our new film called B1 the Movie. It's free of charge. Everybody in here can come in for free. And so if you want to get an invitation to join us for Powernomics training, which is where we're going to show the film, we're going to show it during our weekly Powernomics class tonight at 8:30. You can just text the word greatness to 87948. And I'll also put the link here in the chat so you can just register directly. It's just a simple Zoom. Like, that's kind of how we do stuff here. We know nothing here is too fancy or anything. All right, so let's kind of get started with this whole stock market crash. Were any of you aware that the market dipped today? How many of you, give me a yes if you were aware and you saw it go down and you kind of said, this is interesting. Holy crap. My portfolio is bleeding red. This is ugly. Give me a yes if you are in that category, because I know a lot of you are investors, and so when we talk about consciousness, remember what consciousness is. One aspect of consciousness is awareness, and a lot of people are not even aware that the market took a dip. And if they are aware that the market took a dip, their awareness is basically just built on this sort of fear that, okay, this proves that the dollar is going to collapse and the economy is going to die and everything else. And all that's, I don't know. It's just too much. It's too much. Like, you don't have to be a drama queen about it. Just kind of understand what's going on so you can make an adjustment, right? You have to adjust. And you guys know we did our Stormproof investing event where literally I just went through a series of steps that you can do to take advantage of a market decline. There are a few things you can do in terms of diversification. When stock prices go down, that is always an opportunity. And also just kind of understanding different ways to prepare yourself for the decline. Because whenever someone just asks me, do I think the stock market is going to crash? I say, of course it's going to crash. It's supposed to crash. There's always going to be a crash. There's always going to be a decline. There's never a time when there's not a decline. So ultimately, this was expected. A lot of you know that I have been talking about this for a while. If you've been paying attention, I keep bringing it up, bringing it up, bringing it up, bringing it up, and it's not like it's not. I didn't need my whole PhD in order to predict that. Anybody could have predicted it, because typically what goes up does eventually slow down or come down. And in terms of the specific dynamics that were driving this, basically it was inflation. The inflation report came in hot today, and that was something that they did not expect. They thought that the inflation report was going to be pretty neutral, and that it was going to show a consistent decline like they've been getting, and they didn't get the decline that they were expecting. They actually got a little bit of a shock. It wasn't massive though. It wasn't massively high, but it was high enough that there is concern. And what that did was that put into doubt whether or not the Federal Reserve was actually going to do rate cuts later in the year. So the market's expecting dinner. The market's expecting a big fat plate of spaghetti with a side of steak and some mashed potatoes, and they find out that they might not get any of that. They might get a piece of lettuce instead, or whatever. And that's kind of what's happening. The market's a little bit mad because they were expecting the Federal Reserve to cut interest rates several times this year, and higher inflation is leading the Fed to say, wait a minute, whoa, I don't know if this is the time for us to be cutting interest rates because the economy's strong. Why would we, cutting interest rate cuts are medicine to the economy. That is what you do when the economy gets weak. When the economy gets weak, Then you inject the medicine and the economy gets strong again, like Popeye eating his spinach. And they say, well, why would we give Popeye his spinach when he's already very strong? And then also the other thing about rate cuts is it does increase the risk of inflation. So why would you increase the risk of inflation in a market where inflation might already naturally be occurring, right? So that's the issue. It's like the fear of inflation mixed with the non-necessity of an economic stimulus, which is kind of driving people to have these debates. And then there's a deeper debate about what is the neutral interest rate? What does neutral Fed policy actually look like? I'm not going to overwhelm you with that part of the debate. One day, if you ever want to have like super deep conversations, we can sit and talk about that. But that's more like where us PhDs are sitting around arguing about theoretical constructs, like what should be the neutral interest rate? What does that really look like? Some of you get it. Some of you know these things, and I'm not here to insult your intelligence at all. But I don't think that that's necessary to go into. But it is an interesting conversation because the shape of that conversation drives whether or not the Fed is doing the right thing and whether or not they need to make some adjustments. So that's what drove your decline. If you want to know what I did in response, first of all, I went shopping. You go shopping at the grocery store when the prices are cheap. You don't go shopping when the prices go up. But the stock market people do the opposite. They go shopping the most when the prices are high, and those are the people that get burned. And then they go back and they tell their family, "See, the stock market ain't nothing, man." It's almost like dating. People have these conversations, and they're sitting there saying, all men ain't nothing, all men are garbage, and all women, these women out here, these women are. Well, really, what you're doing when you talk like that is you're really telling on yourself. What you're doing is you're describing your choices, right? Because when you come to me and you tell me all black women ain't this and all black men ain't that, that makes me start to really wonder which black men are you dating, which black women are you choosing, right? So the same thing is true with investing. When people say, oh, investing's bad, I lost everything, I lost all my money, I want to hear that story because I want to say, well, what did you put your money into? Where did you invest? How did you do it? How did you do it? That's like saying that getting in a car is going to get you killed. I want to know where you were driving. I want to know where you drunk that day. Who was driving the car that you were in? What neighborhood were you driving through? Like what was going on? Because most people I know that get in the car, they don't die. But you think that getting in the car means you're going to be in an accident. And I'm trying to figure out what your unique experience was to lead you to have that perspective. Do you understand? So with investing, every investor's experience is different. Every investor has literally thousands of options of places they can put their money in, a lot of different approaches, a lot of different styles that they can invest with. Thank you, Kamisha, for giving me. Kamisha's complimenting me on my analogies. I've been called the analogy king. I don't know if that's true or not, but I'll take that title. I like analogies because analogies remind us that a lot of these concepts that we think we don't understand are things we've always understood because you understand life, right? So if I talk about high level investing and I compare it to having a baby, well, a lot of y'all, half of y'all in here have had a baby already. All right. So you get that, right? Or if I say, like economics is like it's like going to war. Well, a lot of people are veterans, right? So they kind of get it. Okay, battle plan, get my gun, got to be ready. So I like analogies because analogies are just fun. And maybe that was my way of dealing with my ADHD when I was learning because really paying attention was really hard for me. I'm not gonna lie. But I'm one of those believers that you can manage your ADHD if you get to know yourself, meditate and stuff like that. I'm not a big fan of like a whole bunch of drugs and stuff. Again, I'm not telling you shouldn't do it. I'm just saying that wasn't my style. My mama, they tried to put me on medication. My mama told them to kiss her butt. So anyway, all right. So here's the deal. So with the stock market, there are companies like Nvidia that took a major dip. Nvidia dropped by 10%. Nvidia is still a super strong company. They're going to make a ton of money with AI and everything else. It's up to you to decide if you feel that Nvidia is a place where you want to put money. But if you're looking to get into a stock like an Nvidia, maybe this is the time to do it. I don't know. Meta's down. Let's look. Let's do a little field trip real quick. Let's take a look and see what let's go shopping real quick. Let's put a name of a stock in the chat and I'll look up that stock and we can kind of look and see and I can give you a quick assessment because I think today's a good day to go stock market shopping. So let me see if I can show you the overall trend of the S&P 500 first and foremost. The S&P 500 is probably the best indicator of where the stock market is. A lot of times they report on the Dow Jones Industrial Average, but the Dow is not the best indicator. The Dow is it's mathematically stupid. That I'll just say that. The Dow was just designed in a mathematically ridiculous way to the point where you're like, what allegedly smart person decided to create something like this and call it an index. The Dow is just the most famous index, but it's not the most accurate. All right, so let's look at the S&P right now. All right, so the S&P today, 1.6%. That's a big drop. That's going to be quite a bit. And so I want to say the Dow was down maybe 400 or 500 points this morning when I turned on the internet. I would say turned on the TV, but who watches TV anymore? We all watch the internet. And you see it went down 1%. 1.5%. Now, but look at the last, or sorry, let me go back. Let me look at the last 5 days. It's gone down 1.6% of the last 5 days. Okay, sorry. For today, it's a little bit less than 1%. My apologies. For the last 5 days, you have 1.6% decline. So the party's kind of been over. But you see here, the last month, it's still, it's pretty flat. 0.8%, 1% increase. So nothing to be excited about, but nothing to be nervous about. And then the last 6 months, though, you've had a really good market. You see here this 18% rise. That's beautiful. That's big money. A lot of you have been invested consistently during that time. If you've been making money during that time, I congratulate you. Here's what it looks like year to date, going all the way back to January. You got 8.78%, which is good. That's an above average year. If you go back to last year, it's phenomenal. 25% over the year, which is a really good stock market investing year. If you're an investor, you probably made money. If you didn't make money, then you may want to look at the way your portfolio is structured and stuff like that. The last 5 years, you see, it's just the stock market is an ATM machine. 77% ROI. That's like buying a house for $200,000, and then 5 years later, that house is worth nearly double what it was before, 350 or something, right? So that's pretty awesome. That's pretty cool. That's a great way to make money, and this is the number one way to make money in this country if you want to be rich, if you want to be financially secure, if you want to be successful. Why is because the S&P 500 is defined as the following. Let's read this. It's a stock market index tracking the stock performance of 500 of the largest companies in America. So this means that you are literally on the same train as all the people in America that know how to make money. If I can't be clearer to you, let me make this clear. The best way to make money in America is to connect your fate to the fate of the people that are making the most money. Let's do that consciousness exercise. Would you agree with me that some people in America are getting rich? Yes or no? Do you agree that in America, with all its economic problems and all its income disparities and everything else and homelessness, would you agree that there are people in this country that are just getting over like fat rats, paid, making money, making money on their day off, just insane amounts of money? Would you agree with this? Yes. The answer is yes, right? That's a simple question, simple answer. This is what our consciousness exercises lead us to do. So if you want to be rich, why not simply just tie your fate onto their fate? Why not just connect what you do to what they're doing? And it's not a matter of you learning how to do what they do. If somebody goes and starts NVIDIA, and I don't know how to start NVIDIA, I don't know how to do what they do. I don't know how to make microchips. But you know what I know how to do? Me and my wife know how to get on our app and buy some shares of NVIDIA stock so that when they're making money, we start making money. And that's exactly what happened. We bought our NVIDIA stock for $4,000. It's worth about 90. So really, when you are thinking about your economic situation and where you are, where you want to be, etc., I think it's very important to ask yourself, which group am I rolling with? Which clique am I following? Who am I connected to? Whose fate have I tied my fate to? Because I can tell you, if you are either listening to, following, or deeply connected to people that are not winning in this economy, that makes it much, much harder for you to win. So the first thing I'm going to do in the game of competitive economics is I'm going to say, well, who's winning? Who knows their way around this sucker? Who can figure this out? It's like if I go to the jungle of the Amazon and I hear there's gold buried in the jungle, but also there are lions and tigers and wild animals that can kill you. I'm not going to go to that jungle and say, well, let me just go around doop and figure it out. I'm going to go try and see I'm going to go. No, that would be a very bad way for me to approach the Amazon. You know what I would do? I would first read books and stuff and find out how to get a tour guide that lives in the Amazon that can tell me, the gold is that way. The poisonous rattlesnakes are that way. So we're not going to go that way because you might die. That's what I'm going to get a guide. I'm going to get a guide that's going to guide me to the gold so that I don't risk either losing everything or learning the hard way, or somehow having years of trial and error before I finally get a chance to have something good. That's what you do. So ultimately, who is your guide? Who's your clique? Who are you following? Who are you connected to? Maybe I'm one of your guides, right? Again, I don't know everything. I just want to make that clear. We have to. The first thing you learn when you become a professor is how little you know. I believe this is my personal. This is my Dr. Boyce philosophy on being a scholar. Is that if being a scholar should humble you? It should humble you because you got 10,000 books this high that you're reading in grad school, and you realize I can't learn everything that's in that book. So you learn how to learn in a very efficient way. And sometimes the best way to learn something is to go ask somebody else. It's to say, I don't know. I'm gonna go talk to somebody else. I don't walk into a room and assume I'm the smartest person in the room or that I have all the answers. People who do that are usually the dummies. They're the ones whose knowledge base is so small that they really think they know everything when it's not possible to know everything. It's just not possible to know everything. Knowledge is like the ocean, and you cannot drink the entire ocean. But there are some people who say, no, I drank the entire ocean because it was as big as a bucket of Kool-Aid. That tells you, in my book, honestly, I'm not trying to be judgmental, but in my mind, I'm thinking you're kind of stupid. And you don't even know you're stupid because your universe of knowledge is so small that you can't see outside of. It's like when Neil deGrasse Tyson talks about the universe and there being multiple universes. He said we can't see what's outside of our universe. So stupid people can't see what's outside of their tiny universe of limited knowledge. They just can't. So don't argue with them. Denzel, I think, said that it's hard to win an argument with a smart person, but it's impossible to win an argument with an idiot. So don't waste your energy arguing with idiots. It simply will not work. So let's go back to this though. Um, if I'm really trying to figure something out, I'm gonna find the people who know what's going on, and I'm gonna connect my fate to those people. So in this economic jungle of America called capitalism, I encourage you to consider connecting your fate to those who are winning, those who know what's going on. And the companies in the S&P are the best on earth at making money. Not just the best in their neighborhood, not just the best in their state, not just the best in their industry, not just the best in this country. They are the best on the planet, probably the best in history at figuring out how to make money in any economy, any situation, under any circumstances, because they got to make the billions to keep their job. They have to make the billions. If Mark Zuckerberg shows up into a board meeting and says, last year we made 70 billion, this year we only made 65 billion, or whatever, they're gonna fight. They're gonna want to get rid of him. They're gonna have a fight. They're gonna say, "Whoa, you're not performing, buddy. Your growth rate isn't high enough." This is why capitalism is such a horrible trap. It's crazy, but the expectations are insanely high. Like they are as committed to being great at making money as like a lot of our boys are committed to being great at like basketball, right? If you're black and you play basketball, you can't, it's not enough to just be good. You gotta be insanely good. If you dance, you can't just be decent. You gotta be really good or people will make fun of you. Well, that same level of pressure is what is put on the captains of industry when it comes to capitalism. They stress themselves out, not because they're trying to figure out how to make money or how to survive. They're like, damn, I only made 1.2 billion this quarter. I gotta make 1.4 or it's going to be a horrible board meeting. That's the level of pressure they put on themselves. So the downside obviously is they create this crazy society with all this inequality because everybody isn't on the same level in terms of how they're thinking about money, and it does create these disparities that are incredibly unfortunate and unfair. But the good side is that America is a society that has democratized capitalism at least enough that you can hitch your wagon to their wagon. You really can. That's what the whole $5 a day plan is premised on, is saying, look, let's hitch our wagon to the rich people so that when they start getting rich, we're not gonna just sit back and be mad about it because we're gonna be happy about it because we didn't miss the wagon. I really think even even when I think about Amazon, for example, and I think about, the way Amazon is horrible in the way they treat their workers. They have a horrible record when it comes to workers' rights. If you try to create a union, they're going to fight you and all that. And I think that's terrible. They're replacing people with robots. They buy hundreds of thousands of robots every year because they're getting tired of working with humans. But but then I do wonder, if I'm working with Amazon, I'm not just looking to get my paycheck. I also want to make sure that I'm an investor in the company. I want to have shares of Amazon stock because the employees that have been consistently connected to Amazon stock, or the Tesla employees that were consistently connected to Tesla stock, they're not as ready to complain about how much money Jeff Bezos or Elon Musk has because they've seen their own bank accounts rise as a result of their connection, or in statistics we call that a correlation. Their wealth is correlated with Elon's wealth. So they're not mad when Elon makes money because they're making money too, right? So, I would say you have a choice, right? You can sit back and be angry and jealous and mad, or you can participate. This to me is an adequate form of integration. This is the integration that I applaud. The other integration about going to white people's schools and working for white people and spending your money at white businesses and getting beat up so you can go to somebody's lunch counter and give them your money. I wasn't into any of that. But integration in terms of investing, oh, I'm cool with that. I like the idea that if you love Wakanda, if you love the Black Panther, I'm okay with the idea of you saying, I think I want to be a stockholder in Disney so that when they make that next big movie and the movie is a blockbuster and they're making all this money because of this movie, I'm gonna see some of the benefits as well. Okay. All right. So keep that in mind. And then by the way, I know I asked you all to put some stocks in the chat, and y'all know me. Sometimes I get into another direction and I miss it, but we're gonna circle back on that. Before that, I want to remind you a couple of things. One, don't forget that Black movie nights tonight. Some of y'all just came in, so I want to remind you tonight we're showing our new film. It's called B1 the movie, and everyone can watch it for free. And actually, what I'll do is I will give you all the link. If you text the word greatness to 87948, you can get an invitation that way. So why don't you do that? Just text the word greatness to 87948, and I can send you the link. Also, Dr. Claude Anderson and his wife. I love Dr. Anderson. In case y'all don't know, Powernomics is the philosophy or one of the core values of the Black Business School. And so I reached out to Mrs. Anderson and I said, I'd like to really help to share Dr. Anderson's books with the community. And so for those of you that already own the book, maybe you can buy more copies of his books because I think that Powernomics, in fact, I have a Powernomics book right below my microphone. I keep it with me everywhere because I feel like this is just such an important thing for us to understand as Black people. So what we did was we created something called a Powernomics bundle pack in the Dr. Boyce bookstore. And effectively, it just includes Dr. Anderson's book. It includes my book. It includes access to things like Black Money 101 and stuff like that. And also, just like anything else in the Black Business School, it's not just for you. We want you to have sort of an each one teach one philosophy, so you can invite your whole family, share it with whoever you want, and we completely support that. So if you want to take a look at that, and we took a big chunk off the price, I think like 82% or something like that. So what I'll do is I'm going to give you the link in the chat and just kind of show you this is what it looks like, and there's a bunch of stuff in there, so you can just take a look. There's an autographed copy of my book, so I'll literally sign it and send it to you. There's a digital copy of the study guide that goes with the book. There's also the paperback edition of the study guide, so we will mail that to you. There's we have flashcards that go with my book, The 10 Commandments of Black Economic Power. So that book, The 10 Commandments of Black Economic Power, I don't consider it to be a Powernomics book, but it supplements Powernomics because it makes Powernomics concepts relatable to the family. So you can apply these things with simple rules and get your family on the next level. That's what that book is all about. A lot of you like the book, so I know you're going to love it. Also, there's a copy of Powernomics, of course, and then we have a digital training called Black Money 101, which is an introduction to the power of money. I believe that a person that takes that one class, Black Money 101, and goes through half the material is going to have a financial literacy level that exceeds 80-90% of all people. So what I'll do is I'll put the link in the chat. Also, if you want me to text the link to you, just make sure you get on the text list. You can get on the text list for this class by texting the word morning to 87948. Just text morning, MORNING, to 87948. All right, so here is the link right there. And I think you might have, if you got I don't think the link went out already. If the link already went out, then I apologize for that. I thought that it was scheduled for later, but I guess so. Let me go ahead and put it in here so you guys can take a look at it if you want to. All right, so here is so with Dr. Anderson's books, in case you haven't read the books yet, just know we are reading the books every single day. I've been reading the books out loud to you for about 4 years now. And now we are on the Black History Reader. We have already gone through word for word Powernomics. We went through word for word Black Labor, White Wealth. We're going through word for word the Black History Reader. We're gonna go through word for word, Dirty Little Secrets, and then eventually I'm gonna go word for word through that book. That book, what was it? If somebody says I got something in my nose, I don't know. I don't think about that type of stuff. Pay attention now. You got to focus. Don't be focused. If you're focusing on my nose and you're thinking about the wrong thing. All right. So anyway, so the and if I do I have is it just hair or is it? I hope I ain't got no boogies or nothing. Okay. Yeah, I got a hairy nose, so get used to it. All right, so the other book I want to read is a book called what's that book? It's an Empire of Their Own: How the Jews Invented Hollywood. I like this book a lot, not because I'm anti anybody. This is not an anti type of book. So let's make sure we're clear on that. I like it because they literally show you how that community, an oppressed community of they weren't just Jewish, but they were Eastern European Jews, which are I think considered to be kind of a lower class, and they just had this power play, and they went and they created Hollywood, and yeah, Rhonda read the book. Yeah, it's great, it's a great book, and it was crazy to me because as I read the book, it made me realize that first of all, this whole idea that everybody in the community is always unified around everything is kind of silly. Like, I know that we think we're more dysfunctional than everyone else. I don't know how we compare, but I will because I think slavery did a number on us, but they're pretty dysfunctional too. They have a lot of internal conflict also. And a lot of that came up during the McCarthy era where everybody was accusing everybody of being a communist. And it just kind of became this crazy thing. And it wasn't, there was no really unity amongst that community. Like they had class divides and all that stuff. But also it was really fascinating to see how they built Hollywood. And I think about that book when it's called An Empire of Their Own: How the Jews Invented Hollywood. And I thought about that book when I thought about Terrence Howard. We talked about Terrence Howard yesterday and his big lawsuit against Creative Artists Agency. And what he's basically saying is that he feels like they conspired to keep his pay low, that they got together and they created this package and they syndicated everything and pulled everything together and sold it to the studio and kept most of the money for themselves. And I was like, yeah, that's kind of like maybe how a cartel might operate. You just kind of make agreements with the people that are supposed to get the big money, and then you don't include the lower rung people. You get their commitment, but you don't let them have access to the lion's share of the money. And that's what happens in America, actually. That's why they don't want labor unions and all that stuff, because what labor unions do, again, labor unions are not perfect, but I believe the good outweighs the bad. Labor unions show up to the big boy negotiation and say, we want a chunk of the profits. We want a chunk of the big money. We don't want just whatever you're willing to pay us. And so the capitalists get together and say, how do we keep the workers out of the conversation so that we can keep more money for ourselves? So I don't really want you all to be in that position, but I would just say to you that this is what happens, right? So capitalism is really a power game. And if you don't understand power and you don't have an appreciation for the fact that nobody's going to feel sorry for you, nobody's going to give you anything, nobody's going to give you stuff just because it's the right thing to do, you kind of have to be in a position to fight for what you deserve. If you don't get that, then it's going to be very hard for you to navigate a capitalist society. And I think that we as Black people, our financial consciousness is deliberately kept low because their goal is to make us uncompetitive. And what I love about Dr. Claude Anderson in his books is that he explains the history behind the strategic and deliberate, very conscious, there's a word conscious. They had a very conscious objective of making sure that, okay, we need Black people to be loyal to us because we need their labor, but we don't need them to be competitive with us. So we need them to be strong enough to contribute, but not so strong that they compete, that they become our equals, and we definitely don't want them to be our superiors, right? So ultimately, it's very important for you to think about these things as you sort of look at how this system is wired to make black people into an economic commodity. We have wealth extracted from us in every direction. How else in the world can you be a community where $1.6 trillion runs through your hands and you have more talent than anybody in the world? You have style, fashion, creativity beyond belief, the best athletes on the planet, but yet you're not getting any of that money. Well, that is, that's called pimping, right? That's what that is. That's exploitation. That's why it was great for Terrence to have the perm on his head, because he looked like a pimp, and that's because he was getting pimped. That's called pimping. So don't get yourself pimped. All right, so let me so okay, so let's look up, so name a stock. Okay, and the first couple stocks I see in the chat, I'm gonna look them up because I know I said I'd do that, and I'm sorry, y'all know me, I get into what we're talking about. So give me a stock. Okay, Nvidia. Okay, and FedEx. Okay, so I'm gonna do Nvidia, FedEx. Let's see, one more. Chelsea wants C3. Okay, whatever Chelsea wants, she gets. All right, so that's it. Those are the three. Those are the three. All right, so let's hop in and let's take a field trip and let's look at Nvidia stock. Nvidia's the most interesting to me because because Nvidia, I think, took a big nosedive this morning. Oh, but it's already, wow, wow. Okay, man, I'll be damned. All right, so let me show you on this. This is funny. Remember, I told you Nvidia took a dip of 10% this morning. Well, that dip is gone. That dip is, you cannot buy that dip anymore. That dip has turned into a rip. It went, it literally went from 10% down. You see here, it opened at what, 839. It's already gone up 15, 16 points. It's already gone up back up to 869. So it's already in positive territory. This is how fast the market can change on you. This is why, remember, the word poor stands for passing over opportunities repeatedly. I learned a long time ago the hard way. In life, you have to move when it's time for you to move. If you sit back and you wait too long, like you want to ask that girl out and you decide to wait another week, maybe by next week she's got a boyfriend, right? Or that was where I learned, like, to make my move, because I didn't make my move and then I would regret it later, right? Or you decide that you think you might want to get that stock while the price is down. Now you can't do that anymore. That windows of opportunity are always closing, and you don't want to go through life feeling like you missed out on things. And if you look at that, that's crazy that this company, think about this, Nvidia is the exact same company right now that it was 2 hours ago. There's nothing, or an hour ago. There's nothing that's changed about this company, but this company's value has literally jumped by at least a couple $1 billion in the last few minutes. I mean, look at this. Okay, so let's figure this out. Okay, 1.75%. What's the Nvidia's market cap? 2.18 trillion. Okay, so let's round that up to 2%. What's okay? So 1% of 2 trillion is, let me do the math. Okay, 200 billion, 2 billion. Okay, so 1% of 2 trillion is about $2 billion. So let's say 3 billion. So this company's value has jumped by $3 billion in a matter of minutes. A matter of minutes. And this company, it didn't change. It's not like they went into a new industry or found new lines of business or hired a new CEO. None of that changed. It just, the market changed. The market is a little bit of a drama queen. So one way to maybe take advantage of opportunities like that, instead of having to stare at the market all the time, might be to learn about things like stop loss orders and things like that. That way, if you see a stock and it's trading at a price that you don't want to pay, you can put in an order and say, I don't want to pay that price, but I'm willing to pay this other price. They call that a limit order. So you can put in a certain price and say, okay, I'm willing to pay this price, and leave the order open for the next 60 days. And if the stock hits that price, then the order will execute. So maybe that lets you buy Nvidia. So you could go in right now and you could look at the price and you could say, okay, the price right now at whatever it is eight something, eight gosh, let me look. It's 868. You may say, I don't want to buy Nvidia at 868, but I'll buy it at 850. So you could put in an order for 850. It won't be executed, but when the price hits 850, you might get a notification saying, okay, you got your stock, you got it at the right price. Okay, so now the next stock, there was FedEx. So let's do our next stage of our field trip, and let's look at FedEx stock. Let's see what's going on with FedEx stock. Okay, now FedEx is down a little bit less than 2%. Let me share my screen and show you. Okay, so we're gonna pull up FedEx here. All right, so FedEx is down by 5.23 points, 1.89%. The price is 271. Maybe this is a good day to buy FedEx. I don't know. It's up to you to decide. I don't have any opinion on this stock because I don't know much about what the company's outlook looks like right now or what the analysts are saying. But I do know FedEx is a pretty strong, reputable company. If you'd owned FedEx for the last 5 years, you would have made about 38%. That's okay. That's not the greatest out there, but it's not terrible, right? Your money would have gone up. You'd have more than you would have if you spent the money instead. So FedEx is a great American company that, it wouldn't hurt to tie your fate. It's part of your fate to FedEx. Okay, so C3.ai. Now, C3.ai, I think it's kind of an AI company. It's a great company for selling stock options on. We've been doing that for a while. I've made a lot of money off this company, but not really as a long-term buy and hold investor, more so from selling the options on the stock. That stock is down a lot, 2.69%, because it's a smaller company. The market cap is 3 billion. So that's in the world of white people, 3 billion is a small business, which is crazy, right? And and the and so this stock is down a little bit. So if you like it, maybe this is the time to jump in. Let's look at the last 6 months though. It's been kind of negative the last 6 months, year to date, negative. The last year, slightly positive. Last 5 years, horribly negative, 79%. So that means that there are some serious fundamental problems with the company. So I would say if you did buy into a company like that, I would really, really be careful about sort of watching the downside and consider that to be kind of one of your riskier investments. I wouldn't necessarily bet the farm on a company like C3.ai because there is a lot of risk there. Okay, so I wish I could look at Fastly, James. Unfortunately, I can't. It's time to bounce out for today. I think we're about 40 minutes in, and the goal really is to do 30 to 45 minutes. That way, it's not taking too much of your time because I want you guys to be able to get in the habit of talking about money, thinking about money early, and then you can continue throughout the day. And again, that whole project I mentioned to you all, Money in a Minute, we actually started putting some stuff together, and I'll give you guys a chance to join that if you want to. And that literally is where I will be sending you your lessons via text, right? So every day you'll get a financial lesson that'll help increase your financial literacy a little bit at a time in digestible bite-sized chunks because you can get a really good quality financial education without even really ever taking a class. See, my goal is not, I used to want to educate people, and I don't really want to educate as much anymore as I want to actually change culture and change habits. That's more important. Your culture and your habits are more important than what you learn in terms of training because if you are trained on something and your culture does not fit with that what you've been trained on, then you're going to separate the two. You're going to do what I did. For many, many years, I've known about things like stock options and stock markets and all that literally since 1989 when I was a college freshman. And I was a damn good finance student. I was the number one finance student on the entire campus. But the problem was that because it wasn't connected to my culture and wasn't connected to my habit, I became what I call the fat gym teacher. The fat gym teacher is the person that knows exactly what to do. They know exactly what food to eat. They know exactly what workouts to do, but they're not doing them themselves, right? So really, changing your education is not as important as changing culture and habits. In fact, if I had a choice, I would pick culture and habits first, and then the educational part second, because the educational part, they interact, they shape each other, but really the education that you value tends to be affected by your culture and your habits. Process it like this. Think about how many people that you know in your life. I want you to think about this as a consciousness exercise. I want you to give me a yes if you can think of people that you know in your life where you could literally explain to them everything that we've learned and talked about all the stuff that we've learned, and it'll go in one ear and out the other. It literally won't even, it'll just be like, whatever, like, shut up. I don't want to hear that. Right. And you can literally say, look, I know you're broke. I know you're struggling. You can't pay the rent. I have a solution. They're not going to hear the solution. Why not? Well, because their culture and their habits, which are linked to their values, are telling them that this is not worth my time. I'm not interested in this. But that same person will go sit on Instagram for 3 hours and listen to some drug addicted rapper talk about which baby mama he's sleeping with. Right? They'll get into that. That's interesting to them, or getting the newest iPhone, or looking fly and buying the nicest shoes or whatever. Right? That's because it's connected to the culture. This is why that toxic culture has been so costly to the Black community, because what toxic culture means is that I could go to a high school to talk to kids about wealth and investing. And if Sexy Red is in the same high school on the same day in the other gymnasium, The Sexy Red Gymnasium is going to be full. The Dr. Boyce Gymnasium is going to be empty. It's going to be a few little nerdy kids in there whose mamas made them come to class or whatever, right? But the Sexy Red Gym is going to be full of people that it would lead you to say, well, is that what we want? And do we want a whole community full of kids that want to grow up and become rapping strippers for a living? Like, is that our dream? Is that our goal? Is that our aspiration? It's a conflict. It's confusing, right? It doesn't make sense. So really, my goal is to change culture, and I've always had that goal. I just didn't know. Over time, I just didn't know how to do it as well as I understand it now. Like one of the ways I wanted to change culture was that was why I wanted to go on shows like The Breakfast Club back in the day, is because I knew that The Breakfast Club was a cultural influencer, right? And it did make a difference. But now I'm like, okay, I get it. If we're talking every day and I'm connecting with you every day and you're getting the habit of hearing these ideas every day and it's in the flow of your day. It's not like I'm taking time to consciously break away from my pattern to go study this other stuff. It's just like, no, this is just a part of who I am. That's freaking beautiful, man. You know what it reminds me of? It reminds me of The Matrix. Remember in The Matrix when Larry Fishburne was teaching Neo how to fight? And he said, don't think that you're fast. He kept, Neil kept trying to hit him and he couldn't hit him because he wasn't fast enough, right? And Lawrence Fishburne, what did he say? He said, don't think that you're faster than me. Know that you're faster than me. Right? Don't make it something where you have to consciously sort of focus on your economics. Just make it part of who you are to the point where you're not even thinking about it. Do you know how many families there are that are wealthy as all get out and have all kinds of resources, money, assets, everything, and not one single person in the family has ever gone to business school or taken a finance class? There are families out there like that. Well, how do you get like that? Well, you get that way the same way you have families that have great basketball players and nobody ever went to basketball camp, or they know how to dance really well and nobody ever took a dance class, or you got a lot of great singers in the family and nobody ever took singing lessons, but they all went to church and they all saw their older sister singing in church and they all wanted to be part of the church and in the choir and all that, right? So it's culture. It's culture, 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 culture. So if we do that, if we drill in the habits and culture and values, that supersedes education. And then when we show up with the education, that part's easy. That's easy. All right. So anyway, that's my 2 cents. That's my theory. That's how we gonna conquer the world. We gonna go get this. A couple things I want to remind you of. Number one, the Stock Options Summit in Los Angeles. I will be there in person. It's the only in-person event I'm doing this year, except for the All Black National Convention in October 25th through the 27th. So if you want to join us in LA, just go to stockoptionssummit.com. If you want to hang out in the sun and it's a nice hotel and everything, feel free. Stockoptionssummit.com. Number two, tonight we're screening the film B1 the movie as part of our Powernomics training. If you want to join us for the film and the discussion after, it's directed by Rick Mathis. It's a great movie. You can just text the word greatness to 87948. I will send you the link to join us tonight. Next, one more thing. If you want to take a look at that Powernomics bundle with Dr. Claude Anderson and get a copy of Powernomics for your kids or for the neighbor's kids or whatever the case may be, my wife and I just keep copies of Powernomics around the house just in case we meet some kid that needs some influence. And so here is the link again for that. And we took a big chunk off the price to make it affordable for everybody. So feel free to take a look at the Powernomics bundle. My book is in there, which is called The 10 Commandments of Black Economic Power. But Dr. Anderson, he is the goatiest of all goats, and so Daddy Goat, his book is in there as well. And so you can feel free to grab a copy of that. So anyway, I'm out of here, guys. Have a great day, and I'll see you all tomorrow morning. Don't forget, make sure you're on the text list. Text the word morning to 87948, and I'll send you invitations to join us for our financial consciousness training, Money in the Morning. Have a good day. God bless you, and I hope you make a ton of money. I'll see you guys.